Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So I'll be presenting the forecast for this particular week, 10th to 14th of August. And today we are on 10th, between 5 and 5:30 GMT. I'll try to explain to you the derived forecast and also do the market reading for you. And you can also track along with me the market using the live market code page and find out what the players intend to do during this particular week. And also we'll try to talk about the trading strategy and see how exactly when the market is in trend reversal or during that of the trending time, we should be in a position to trade at ease. So it is the second week of August. So as we have seen last week, it was the first week of the month beginning time. So obviously they have made the trend reversal moves. They made the whipsaw moves on the downside as well as the upside. And especially on Friday for the non-farm payroll, as envisaged, they made the slide during that of the European session after the non-farm payroll release. And, even though that release was less than expected, they just made the drop in the case of Euro and GBP, giving some excuses. And later on during that of the US session, they started gaining the levels. So ultimately, we need to read their intentions using the forecast model and also using the market reading technique, fine tune it so that we'll be able to perfectly understand what they are trying to do, so that we need not get convinced with regard to all the excuses given for the drop and the rise. And before that of the non-farm payroll, by 12:29, they made a very quick rise in the case of Euro. And they just went up to 1.0971 from that of 1.09 and then started making the drop from there to 1.0850 area. Then again started rising towards 1.0970 by end of the day or for the US session close. So ultimately, they had done the whipsaw moves on either side, about 70 pips on the upside and 70 pips on the downside. So ultimately, they made about 150 pips spread of their move. So this is what they do from time to time, depending upon the traders' spending positions. If the traders have committed positions and expecting a big profit by holding a long position or short position, the players are here to trigger the stops on either side and they become the winner. So if you think that, okay, the non-farm payroll is vital and throughout the month, the market is going to move in line with that of the non-farm payroll, then we'll be defeated. And we will see that we don't make money. Ultimately, we have to think, or we have to keep in mind that non-farm payroll release is nothing but an excuse for the players to make a big move. That's all. Then subsequently, they have their own method of making the moves in the market, and they make the moves in order to create the market sentiment and then act against it of the traders. That is the only intention. Only by that method, they'll be able to consistently earn money from the other market. So it is a money-making process. It's nothing to do with the economic conditions of the various continents and also various countries. So they may say that they're all attributes, but those attributes, they just take it as a guideline. But for the intraday moves and for the long-term moves, they can make any way they want in order to trap the traders. Not only in forex market, in all other markets, they do the same trap method. That is why you find all the analysts saying that 95% of the traders lose money in the market. Why? Because they teach the technical analysis and say 95% of the traders are losing money. So that means technical analysis is not working. But still they try to teach that and say that you will be able to earn and be the part of 5%. How? By avoid taking positions in the market. And only whenever there is a clear-cut instructions or clear-cut indications, you enter into the market. But unfortunately, what happens? The players make whipsaw moves even though you come across a clear-cut intimations or informations or the indicators say that, okay, there is going to be a downward move, but the players make a downward move and then make a rise opposite to that. So this sort of indications, again, people will say after some time that it is not dependable. So they try to use different type of tools and say that it is not dependable. It is not dependable. And ultimately, they find that, okay, the players are against all the traders, that they need to understand. But they have an excuse in order to distribute among that of the traders that market is huge and it cannot be manipulated. But they know very well market is being fully manipulated, but they do not want to accept it. Or probably they do not want to pass on the message to the other traders. Now, during the second week of August, they are expected to make the trending move. So, trending move, they will start with a week beginning false move on the downside and then try to make the upside move during this particular week. During the month of August, they are expected to make an upward trending move in the case of Euro and GBP. So, ultimately, how exactly they are expected to make the moves? So today, as a week beginning false move, they may make the slide during that of the Japanese session and start gaining that of the European and the US session. And again tomorrow, they could make a drop during that of the US European session and then gain the levels. So there could be a extended downward stop and either tomorrow or day after tomorrow during that of the European session. And that downward stop and extended downward stop and will indicate there will be shift in trading zone on the upside. So all along we have been seeing that Euro and GBP were making range bound swings, and already they made the downward move in the case of GBP in order to make an extended downward stop. So that is why they will show the new lows, and already Euro, they just dropped it, and many of the people are willing to buy Euro when it drops. So they do not want to drop Euro, but they wanted to drop GBP in order to create the sentiment on the downside quickly and then start reversing the market and shift it to the higher trading zone. So always you keep in mind the lower level consolidation will lead to extended downward stop and then followed by that a quick upward consistent move, and then they will go to that of the middle level. In the middle level, they will try to make the wide range consolidation with either way stop ends in the market. Then afterwards, an extended downward stop and then continue to make upward move and make another shift in trading zone to that of the higher levels. And once they consolidate at the lower level and accumulate huge positions, then they will make only a short duration of middle level consolidation and then go to that of the higher level consolidation with a frequent upward stop in order to book profit of all the long positions accumulated in the market, and then they start making the slide. This they have to do it before that of the US elections. So keep in mind they are expected to make a very quick rise and give all impressions to that of the traders that Euro and GBP could go to heaven, and then later on make a big drop and say that, okay, US elections are coming through next year. So before that, we wanted to square up all the positions. It is simple. So ultimately, these players know when to rise, when to drop. And it is not based on the non-farm payroll or the other type of economic indicators or the parameters. They just use it in order to confuse the traders, but they have their own main agenda. How exactly the manipulation can be done so that they don't get caught. So that is the ulterior motive, and they wanted the money to work and they want the money to just multiply, and they continue to remain as the richest in the world. So they are expected to make the extended downward stop and either on Tuesday or Wednesday and then start making the firm up move And Friday, they could make a brief downward slide and then start making the rise. Then next week, followed by that 17th to 21st of August, you come across the week beginning false move similar to this week. And then the rise will be very significant during that particular week. So keep in mind that they are going to become aggressive traders, or aggressively they could gain the levels in the case of Euro and GBP during this particular month. So don't think that again and again they will make the wide range swings in the market. Now coming to that of the levels in which they could make the swings in this week. So from 1.0875, probably a brief downward stopping they could make. In GBP, the estimated level is 1.5450, but they could go deeper, about 150 pips from there to 1.53 in the event if they make extended downward stopping, and then they will pierce the high. In the event if they go below 54.50 in a very quick move, then they will go up to 1.59 by end of this week. So keep that in mind. GBP is going to be the currency used normally to make the extended stop end in the market. Then USD yen is expected to make the swing from 123 to 125.50, CHF from 97.50, a brief downward move, and then they will go to 0.99 area. So as you notice that when they gain the levels in the case of Euro, they slowly gain the levels in the case of Euros. USD CHF. As a result, the Euro CHF is slowly gaining the levels. So you remember that S&P was telling that we are not interested in 1.20, but they are now taking Euro CHF to that particular level. So they simply give something to that market, but the players make a differential move. Then the traders question why it is happening like that, but there is no one to answer to these questions, and they will say better look into that of today's economic events and find out what is going to happen in the market. So that is how people are not willing to answer to some of the basic questions which are arising out of the mind of the traders, out of inquisitiveness, because they are not in a position to earn money. So they need to find out why the market is behaving like this. And sometimes the people always say that the market is wild or virulent or use all sorts of attributes because they are not able to understand. But without understanding the market, if we enter into it, it is something like without knowing swimming, you are jumping into the sea. So if you jump into the sea without knowing how to swim, where is the question of coming out of it? So you should know, not in normal swimming, you should know how to swim against that of the tide and how to swim along with that of the tide. Only then you can enter into that of the sea. Those who can swim in the ordinary pond or in the swimming pools cannot do the swims in the sea. So there is a difference between that. So in the same way, if you want to enter into the market, you need to understand the depth of the market. That is, how the market is being manipulated, how the market is being structured, how players consistently make moves in the market in a very similar way. And when I have been giving it for nearly about 15, 16 years, there is no change in the way they try to cheat the traders. So cheating has got only one method, that is distract the people and then try to grab their money. That is the only method by which the cheating can be done. So it has been proved beyond doubt in the market also, the cheating has to be done by cunning moves. So that is what's happening in the market. So now you will find that USD CHF is also expected to gain, and USD CAD, it will make the higher level consolidation and slowly make the slide. Australian dollar will try to do it has done most of the lower level consolidation. It is expected to gain the levels during this week. Now we'll come to that other market reading. So let us see how exactly they have moved the market. So in the case of euro, 1.0951 is the low and 1.0974 is the high. They are not breached the low or the high. In the case of GBP, 54.78, 79 and 54.98, they are not breached the low or the high. Then yen 124.14, 124.42, they are not breached the low or the high. Here again, in the case of CHF, low or high are not breached. Also in the case of Canadian dollar and Australian dollar. So you find that the players have set the lows and the highs around 3:30 GMT, initial lows and the highs, and now it is 5:22 GMT. Still, they are not breached the high or the low, indicating that they wanted to slowly make the moves once the volume improves. And if you look into that of the net changes, Euro, USD and GBP showing positive net change. So that shows that they are handling the crosses nominally, and slowly they will handle the crosses also, and crosses also in a deeper way in this week. And you find that Canadian dollar and Australian dollar, and they are showing the USD gaining move, whereas USD CHF is making USD weakening move. So you find that the majors are showing USD weakening move, excepting USD yen, and the commodity pairs are also showing the USD weakening move and USD gaining move. So there is a contrarian move in order to handle all the crosses briefly, and later on they will come to the majors during the part of the day, or once the volume improves in the majors, they will try to breach the initial low or the high and try to make the swings in the market. And slowly they will confuse the traders by making extended downward stop using some rumor or the speech, and then reverse altogether totally, similar to what they have done on Friday before and after non-farm payroll release. So normal trading method, we note down the initial lows and the highs, and we just take a sell position if the market is near the high and not breach the high for more than 30 minutes after coming closer to high, then try to close it near the low. But we take positions only when the spread improves between the initial low and the high to more than 40 pips. Till such time we wait for the market to settle, or made the market to set the initial lows and the highs, and later on they will try to make their swings. Then it will be easy for us to trade. Before that, if we try to take position, our holding time will improve, and that it will increase, and that will only put us into impatient condition. So avoid impatience by taking the positions when the market is simply consolidating and when the spread between the high and the low are not more than 40 pips. Then once you are taking the position, once the spread increases to more than 40 pips, then you try to take a sell near that of the high or a buy near that of the low. And when the low or the high are not breached for 30 minutes of your observation, or during the early part and the late part of the session, so that they will be active in handling the majors. Then afterwards, keep 30 pips hedge order to limit the risk. Once the position makes profit, keep stop at entry and remove the hedge order, and then try to maximize the profit by keeping 45 or 75 pips limit order as the exit order or take profit order, and also use a 15 pips trailing stop in that, so that the market might hit a trailing stop in a profit making position, or the limit order, thereby the profit is protected, so that you can forget about the trade. Either it can hit your trailing stop or the limit order, and you can take another position. That way, if you try to take more positions after protecting the profit, it will not lead to over trading. Then these are all the session timings. So note down the session timings, and early and the late sessions they handle the majors, and mid sessions they handle the crosses. And always keep in mind they handle two pairs at a given time. And then watch those pairs which make 40 pips spread between the high and the low to start with. And those pairs they will handle to start with on the respective crosses. And later on they will spread their moves to other currencies. So let me answer to the questions which are asked here. Okay, how many pips in change in trading zone? See, normally the monthly spread, the weekly spread is about 100, daily spread is about 150 pips in the case of euro, and weekly spread is 350 pips, and monthly spread is 1100 pips. So the shift in trading zone, they will try to do at least 700 to 900 pips, and with the upward stop and followed by that 2100. Then Bitcoin, how will gold play out this week? And as on Friday, you noticed that gold did not make much of a drop when compared to that of euro and GBP. That indicate that the traders are willing to buy when gold comes around that 1080 and below. So they just came closer to that and start reversing it along with that of euro and GBP. But they will also try to make an extended downward stop, and because when the traders find that gold is well supported around 1080, then that usual way of making the moves in the market, they go below that, hit all the stops in one go and reverse the market and go above 1100 and 1120. Then once they go about 1123, they will straight go to 1180. This week, they could make an extended downward stop and then go above 1123. In any. Euro yen has not moved much in the past 2 weeks. That is what they have been doing, the consolidation in the normal way. What could be the expected move for this week? As they have been doing more of a consolidation in the case of yen crosses by making the lesser contrarian move in the case of euro and GBP, because they are holding and building sell positions. They are holding and building sell positions in the case of euro yen and JPY yen. Then afterwards, they will let loose and make about 300-400 pips drop. How? By making one big drop in the case of USD yen, and that will change the market sentiment. And so whenever the range becomes narrow in the case of yen crosses, keep in mind that they are just holding and selling. See here. It's about 30, 40 pips, 50 pips like that. They are holding and selling. Slowly go to the next zone, another 30, 40 pips, and then hold and sell. Go about 20, 30 pips, go and sell. So if you buy, you can see only 20, 30 pips profit. So you will wait for the bigger profit, because thinking that technically it has breached all that resistance and gone above. So the support is around 200 in the case of GBPN. That is what you will see, and you will happily wait for that to happen. And suddenly, after distributing all the position, they will make a drop. Always keep in mind that the players create the market sentiment and act against the traders. Winner effects. Will pending US rate hike push all US currency pair to drop? See, rate hike, FOMC rate hike is another trigger for the market. There are occasions wherein they have done the rate hike and they even dropped the rate, but the market behaved differently. And you cannot expect the market to behave in tandem or in line with that of your expectations of relating the rate hike with that of the market levels. If you try to relate it, you will be disappointed, let me tell you. Because there are occasions wherein the rate hike has happened, but they had dropped euro and GBP, telling that it is a US dollar gaining move. And same way, if there is a rate hike, immediately they also said it is a risk appetite. They gained the levels in the case of euro and GBP. And the reverse also, in the dropping case also, they had done it like that. So they're all nothing but the excuses. They use different excuses during different times, depending upon the context. But ultimate is read their intentions, what they intend to do. But they are expected to make the shift in trading zone on the higher side in the case of euro and GBP than any. May you please inform the possible highs that could be reached in euro GBP by end of this quarter? See, euro GBP is trading around 0.70 with a downward stop into 0.69, and it is likely to go to 0.75 area. Then there are questions in the question answer window. Could it be the range for the USD CAD this week? USD CAD, as I explained, that they had done the high level consolidation with a frequent upward stop, and in order to make a drop to 1.28 to 1.27 level. And slowly they will come down to 1.26. Can you please explain CAD more today? CAD is expected to make briefly either way stop and today with the range is very narrow. And then later on you will come across it will start coming down. And most of the days you will come across it will make one upward stop and followed by downward stop, and depending upon the sessions. Is there any other question, please? Let me show the slide showing the expected market moves for this week. And this webinar is being recorded and it will be available for you to visit and in FX Trade, and also you will be in a position to check what are the type of moves they are going to do it in different sessions of the day. You know about Australian dollar. Australian dollar is expected to slowly swing and gain the levels, and it will be gaining along with the euro and GBP. And the only thing is they will alternate. That is, when euro and GBP are gaining, they may make a sideways move or a small dip in the case of Australian dollar. And later on, they will try to gain more in the case of Australian dollar when euro and GBP are not gaining the same quantum of pips. So they are all mainly to handle the Aussie crosses, euro Australian dollar and euro Canadian dollar. Then later on, you will find that they will make the moves in tandem with it of the majors. So you have to identify first of all what pairs they are handling in a given day. Then only if you try to commit positions in those pairs, you are having an assured profit. Simply trading all the day in case of euro, all the days in GBP may not give an adequate result. Okay, no more questions. So I will take this opportunity to thank FX Trade for the facilities provided to present the webinar. I'll come back on Thursday, 13th of August and try to review the forecast, what I have given it. Okay, there's Warren has got a question. Euro Australian dollar is at the bottom of the week trend line. What will be the highs and the lows in this week? Okay, it is likely to, because now you find that euro Australian dollar, euro is in the positive net change and Australian dollar in the negative net change. Australian dollar becomes the denominator in euro Aussie. So when it is weak against US dollar, obviously it will come down, and they are expected to gain the levels in initially sideways moves will be seen because they will be gaining more levels in the case of euro when compared to Australian dollar. Later on, Aussie is expected to gain more when compared to that of euro. Then they will start gaining the level in the case of euro Aussie. And then later on, they will gain in both euro as well as Aussie. Then again, it will make sideways move. That is how you have to identify how they are pulling the strings, euro and Australian dollar, in order to find out what will be the type of move in euro Australian dollar. Okay. I take this opportunity to thank FX Trade and also you people who have come here to listen to the webinar. 13th, we will see again and see what happens to the market. Until then, wish you all very happy trading.